Hi, I'm Chad Bordeaux, and welcome to this video edition of the Bean Counter Ramblings blog. Today I want to talk to you about a 3.8% tax on home sales that's in the new health care bill. Over the past several weeks, I've had several people come up to me or email me about a particular provision that was snuck into the bill, this provision being the tax on new home sales. I've seen a lot of misinformation out there in both the national media and on blogs that states that it's basically a sales tax of 3.8% on the sale of all homes. Most of these media outlets give an example. Say, for instance, you sell a $350,000 house, you owe 3.8% or $13,300 in taxes on your sale. This is simply inaccurate and couldn't be farther from the truth. Washington politicians are greedy, but they've not yet created a national sales tax. What this provision of the health care bill actually does is create an additional unearned income tax for Medicare that begins in the year 2013. As Washington's increasing its attack on the upper middle class and others that it considers rich, it's decided to collect a little bit more of the investment income from real estate and other transactions. As such, this new provision only applies to individuals who earn over $200,000 individually or married couples earning $500,000 combined. The tax also is not calculated on the sale of your home, as most of these articles are leading you to believe. It's taxed based on the profit that you realized in the home. So if you paid $300,000 for a property or a home and you sold it for $350,000, the amount that would be used for calculating the tax would be your gain, which would only be $50,000. This computes to a tax due of $1,900 instead of $13,300 that's often reported, which is a vastly different amount. Another thing to consider is that home sale exclusion rules still apply. So if you meet the definition of it being your primary residence for income tax purposes, you can still exclude up to $250,000 in profits if you're single, and up to $500,000 if you're married. So that has not changed. Because of both of these provisions, the home sale exclusion still being intact, and the income, you happen to make over $200,000 individual or $500,000 as a couple, because of those two provisions, the bulk of the people that are being hit with additional taxes will be investors or high income earners. The bulk majority of individuals will not be hit by this additional tax. I hope this clears up any questions that anybody has on this. If not, feel free to email me at chad@yourcpapartners.com. I look forward to hearing from you. Thank you.